Good morning. The high bar, low bar, medium bar scenario that's often talked about on pre-market prep related to earnings can easily be translated to, you say it, tariffs. If you say you're going to do 145%, 150%, you only do 30%, well, you kind of lowered the bar, but what's that 30%? What are the numbers? What's that really going to be? How's that going to affect our economy? A deal's a deal. The market's responding to it. How are we going to respond to it? Well, we'll look at the numbers. We'll look at the price action. We'll see what's really getting helped on this. We'll talk about it with Tim Quast at 8:35. We're kicking off the week on pre-market prep right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, right up. 172 handles, 58.50. We're back at some levels we haven't seen since March. The Bucks liking this too, up $1.40, 101.58. Moving up on that 50-day average. TLT, we're not getting lower rates soon here. Down 60 cents, 86.45. Crude down right back up. 3 straight days up 274, 69.35. Not good for GLD. Silver or gold and silver both getting hit. Silver a little bit less, back under 30 at 29.38. The CSLV. GLD down nearly $10, 297. Bitcoin just hanging out here above 104,000, up $520 at 104,155. Let's bring Triple D in, and Triple D, I'll get it out of the way. 0.4 seconds. Is that like?
I don't talk sports.
Okay.
The wrong place to go. Oh my gosh.
Okay.
Yeah, it was a terrible weekend for Canadian hockey. Terrible weekend for Canadian hockey. All the teams, Leafs, Oilers, is finding ways to lose. Oilers goaltending has major problems. It looks like Pickett's hurt long term. Skinner, and who has been just absolute disaster, is going to be the goalie they're running with. So pretty much the season is over unless Pickett can miraculously come back. So they were doing well when the backup was in. That Skinner's no good. And the Leafs are having problems now too. Florida beat them last night. So that's our sports talk out of the way. Not good for Canadian hockey.
Okay. So, man, you can wake up this morning, you can look at the markets and say, oh my gosh, look what happened.
Mm-hmm.
But if you kind of were reading the tea leaves at the end of last week, this is not such a shock in a few, under a few different circumstances.
Yeah, I mean, we knew they had talks coming. We knew the talks were going to be productive, probably. We didn't know they were going to get a deal, but is this even a deal? I mean, when you start looking at it, it's a 90-day temporary deal. It's tariffs of 30% still, which is still substantial. But this is the art of the deal. This is how Trump does it. He throws out absurd numbers, and then when you come back down to reasonableness, the other team takes the deal. This is what he's done. So bravo to Trump, because, he wanted higher tariffs on China. If he would have just thrown out 30%, they would have said, no way, never. But no, he goes 145%. And they're like, oh my gosh, what are we going to do? And then it comes back down to 30, and they're like, take it, take it, take it. Art of the deal. Did pretty good on that, actually. I don't think it's going to be great for, the U.S. economy long term, but art of the deal, Trump won. He wins. So let's just lay it out here. And obviously, if you're, just tuning in for the first time, didn't pay attention to any headlines over the weekend, we've got a temporary deal between China and the U.S., bringing the tariffs for 90 days down to 30%. Not 3%, 30% still. It's significant. I was doing a little bit of math. It's hard to get these figures exactly, but it looks approximately 16% of US goods come from China. So 16% of everything sold comes from China. You slap a 30% tariff on 16% of your goods, that's almost a 5% translation of inflation into the CPI if they pass it all through. Maybe there's going to be some absorption. Maybe some retailer's going to absorb some of it, not pass it all through. I don't know. Maybe they're going to buy a lot less from China. That's the idea that Trump wants anyways. But either way, probably going to be somewhat inflationary. So that's one consideration. Other stuff just to think about is what if we're going to rally, and this is, the bullish scenario, if we're going to rally 3% on the S&P every time we get a partial deal now I guess China's the big one, but you got 190 countries still to do deals here. So we're going to just rally ridiculously on every deal. This S&P is going to be at all-time highs before we know it. How do you fight that tape, Joel? This is what we were talking about 3 weeks ago when I said you can't be bearish. We were at 510 on the S&P, 510 on SPY. And I said, you can't be bearish because there's deals coming. And once those deals start coming, this S&P is going to start rallying. Well, that's exactly what has occurred. At a certain point, maybe, I think you get bearish when they stop rallying on deals. That is not today. If we were to turn around and sell off and give this back, that would be a major problem. But right now, the tail of the tape is higher. Right now, money managers are underinvested. Right now, it's all about the deal. And the art of the deal is working for Trump.
So you have a floor, you have a ceiling, right? Maybe the floor is just 30%. Yeah.
What's the ceiling?
145%. I mean, I don't know if he's
going
going
you mean
back
on the tariffs themselves? Yeah.
Yeah.
I don't know.
Well, yep. He's going about there. I mean, we do have, the ongoing debate between economists, ourselves in the chat. Is this old, flowing down to the consumer? Are these companies already raising prices? Is this going to have a staunch inflationary impact? Or is this be offset by more money coming into the United States and more investment here? It's hard not to see how it's going to impact prices, and it's hard to see how this is not going to be inflationary. The question is when? When is it going to start showing up in the numbers? And we do have some numbers coming this week. We have PPI and CPI, and we have blue
None of that's
coming
going to
on.
be in there. And none of that's going to be in there. That
No.
stuff won't show up for months. The market is just on the road back to all-time highs here, folks. That's where it's at. But, so I will say, the time to get bearish, stop looking at technicals and charts. You don't have to, you can figure this stuff out without technicals sometimes. The time to get bearish is when we sell off on the deal, when we give it back. I don't know when that's going to happen. It could happen today. If we turn around and go red, this market's got problems. I don't think that's going to happen. Right now, there's no signs of that happening, not even a smidgen. This wasn't even a full deal. So there's no way to come in here and start shorting stocks when we've got so many more deals going to come here. If they're going to rally them, like I said, 1%, 2%, 3%, even 1% on every deal, we're going to be at all-time highs before we know it. So it's a headline-driven market, folks. This is what is driving price. Headlines, headlines, headlines. Headlines over the weekend, pharma headlines, which we'll get to in a second, which were told to us by Politico, but this market price isn't nothing, so it doesn't even consider it. Last week, and all of a sudden, pharma selling off this morning because, oh my gosh, he's going to attack big pharma. Politico told us that last week. They told us that was the big announcement. Bravo, Politico. Bravo to the people who were reading it and listening to this show, because we said you can't own pharma right now. Cannot own pharma stocks because we know what's coming. Here it comes. So they're down this morning. It's unbelievable, man. Unbelievable that this market is just so like just doesn't price anything in. I'm just shocked at how much it doesn't even care about anticipating headlines. There's so much money being made from headline anticipation right now. It is ridiculous. So much money. So let's give the pharma news, because these are the two big stories of the day. The one everybody is talking about is the China deal. But the pharma deal is a pretty damn big story too. Pretty big story too. The pharma deal is Trump tweeting out, and we don't have all the details on this yet either. You know, devil's in the details, but nobody cares about the details because it's a headline-driven market. But trying to bring drug pricing down. What is the number? 70 to 80%, I believe. 30 to 80%.
I thought I saw that, and then 80%, but then I saw another thing that said 59%. But the initial number I
Trying to
saw
bring
was
it down
80,
significantly.
80%.
That's the big announcement. We said this on this show last week that was the big announcement he was teasing. We said on this show that you can't own pharma because they're going to go down when this announcement happens, because the market doesn't price anything in. So going through the tail of the tape, we got Lilly down 3.4%. We got Bristol Myers. It's holding up well, only down 0.65. That one's holding up pretty good. We got Merck down 2.4%. Pfizer down 2.2. Gilead down 4.41. This on a day that the S&P is up 3%. So this is serious.
Keep that in mind.
Serious. Yep. Like, you know, everything is up. So when you're down 3% today, you're hurting. This was predictable. This was obvious. This was obvious, guy says. So if you're getting hit on Pharma today, you deserve to get hit on Pharma today because you didn't read the political article and you didn't listen to the show. That is unbelievable. Unbelievable that the market just prices in nothing. I mean, it was trying to, because we said XLV was going down Thursday, Friday, so it was trying to price it in. Now we get the official announcement, it is priced in. I don't know where we go from here. Like, is it all in? You know, we don't know the numbers. There's so much like uncertainty and not that clear. What's the whole plan of attack here? We'll get more details on everything today. Get more details on the China plan. Get more details on the drug plan. But all of this is, you know, significant. You know, big pharma is under attack here now from the Trump administration. Makes it hard to invest in these stocks. Makes it hard to invest. Now, and live, love, sale. We're not trying to be depressing. We're trying to just lay it all out. I said we're going to all-time highs. Is that depressing? That's what's going to happen if the deals are on. I'm just trying to lay it all out because this market is very simplistic and very inefficient. It's efficient in the short term and very inefficient in the long term. I can't figure out where we're going next week. You know, it can price in the next few minutes. It can price in a headline. But, you know, where we're going 2-3 months from now, it's very inefficient at that. And I don't think anybody really knows because we don't know what the next headline's going to be. Very, very dependent. Very, very dependent on headlines.
Well, we have the information, right? We had there was some anticipation of the information coming out, right? The information came out, and now we have to translate it into the stocks, into the price action, and do we just like say, "Yep, this is just just kind of just passing things over, patching things up, everything's to be okay, and we got to chase," or is this just if we thought that there was a good selling opportunities down when we were rallying back last week, with things still not being 100% clarified, is this selling opportunities? I mean, look at up and down Apple. I mean, here you go. I mean, up $12.39, up 6.2%, back up to where it got hit from earnings. I mean, is this just an absolute gift here for the people that still been trying to defend the stock and buy the stock, or it's just like all clear, all clear. If the market's going back to all-time highs, Apple's going back up to all-time highs.
211. What a move. I mean, 28 times earnings, whatever. Nobody cares about that either. I'm just trying to be realistic here and trying to like just grasp, what's happening. And it's difficult as, an investor. As an investor, I look at, from an economic standpoint and think, how are we better today than we were yesterday? How are we 3% better today? Like, that's really what you have to ask yourself. I don't understand. Like, I guess because we were 145% tariffs on Friday and we're 30% tariffs today, we're better. So I guess that's great news for Apple. But Apple's talking about raising prices on iPhones. They announced that this morning. Well, they didn't announce it, but it's rumored here this morning. 7% iPhones are going to go up. They didn't say why, but we've got to assume if there's going to be tariffs, and especially if it's going to be upwards of 30% on China, that they're going to have to pass on some of that to the consumers. It's going to be inflationary. Like, I mean, that just brings us back to the Fed. I mean, there's three main things today. You've obviously got the deal with China. You've got the Pharma, disaster that is. And then you've got thoughts on the Fed. Where does the Fed go from here? I mean, if we start looking, at tariffs sticking at 30%, 10% across the board, but 30%, for the countries we don't like. I mean, that's got to be inflationary if you're saying they're being the Fed. I got to think the Fed's going to say, I ain't lowering rates anytime soon because we're going to have an inflation problem starting. And the TLT is telling us that. So bring up the TLT, Joel, too. I know we're kind of going all over the place, but it's all part of the same conversation here. It's laying out the macro picture. This show really today needs to be about laying out the macro picture, understanding where we are. So TLT is not far from the lows. Why is it coming down? It's obvious why it's coming down, because if tariffs are going to be continuing to stay in at 10% across the board at a minimum, and in some cases 30%, it is going to be inflationary. Apple raising prices, inflationary. That means the Fed cannot lower rates anytime soon. Forget about the June cut. It's gone. I don't know if you're going to get a cut in 2025. I don't think so. That's me personally just speaking. But, at one point in time, June was 95%, down like 22. I think it's a zero now. If the tariffs are going where they are, I don't think the Fed can even think about cutting rates. So, and the TLT is speaking that. The bond traders are speaking that. So think about higher rates for longer. Think about prices kind of going up. Think about margins getting squeezed at companies. That equals a 3.1% rise in the S&P. It doesn't make any common sense, but when you think about it, it kind of does, because you got money managers who are massively underinvested that were thinking about all this stuff, putting it together. But what they didn't consider is that this market is so hungry for deals that would rally significantly on any thought of a deal, a partial deal, or a full deal, like in the case of UK. We have a lot of deals to come. So until they start selling off on deals, it's hard to be bearish.
Tech getting a big boost. We mentioned Apple trading double with the market. Also, the tech as far as and we had a little bit of hint on this on Friday. Nvidia really outperforming the market too. That's up 5%. Amazon, the biggest winner of all here, trading up 8.5%, $16 on this news. And Google recovering, Meta up more than the market, Tesla up more than the market. Tesla getting kick-started by Kathy on Friday
Yeah, and not looking back.
and not looking back.
Tesla, Kathy Woods comes on CNBC, starts talking about a $2,500 price for Tesla, and it blasts off on Friday. I bought the close on Tesla because I figured, it'd probably be a weekend ramp again. I had no idea we were going to get this kind of ramp. So these were my closing trades posted in the STN room on Friday. Let's just look at them. But these are what I bought on the close. What I bought on the close. Burke B, I've sold that already. That was okay. Tesla, SoFi, RGTI, ZI, I'm still in that. On, SE, Space, and DDD because they were reporting. There's a good winners too, but they were small. SMR and Oklo. Made a little bit of money. But everybody tells me the STN room isn't worth $179 a month. Okay. That's
You
fun.
know who also is getting a big lift here? We talked about the tech, but retail's loving this as well. You got your dogs, your RH, trading up $35 on this news. Wayfair trading up $5. I mean, this was a really beaten down sector. I mean, I think Five Below up $10. BBY. I mean, it's a retail. Wow, BBI up 7.5. When you got Nike up almost $4, you know that it's a retail rally. Also, Elf.
And Nike also, Joel, obviously is direct Vietnam. All those clothes being made
Yeah,
over there. I mean, so there's not a deal with them, but if there's a deal made with China, you're thinking that's coming too. So, and some of it's made in China too. So I mean, that's direct like benefit from lower tariffs. If you call 30% lower tariffs, I mean, we go from 50 to 145 down to 30. It sounds like a deal. I would still think you're going to have some inflation in there though. So yeah,
and then
the direct benefit to today, because this market is focused on short-termism. I mean, that's what it is. Like your Lululemons, your retail names for sure, huge benefits from because this move of down to 30% is a hell of a lot better than 145%. So there is an immediate benefit that we were at 145% on Friday. Now we're at 30. When I try to like just paint it all, it's like, how are we better off today really than we were 2 or 3 months ago? Because we didn't have any before. Like I always forget the name of it. What did he call it?
Liberation Day.
Liberation Day. Before Liberation Day, we didn't have any tariffs at all. And now we have 30% tariffs on China, and we're 4% higher on the S&P than we were on Liberation Day. Wow. The art of the deal, it's taken the market, man. The stock market has fallen for the art of the deal. Bravo, Trump. Bravo, Trump. He did it. He did what he said, and that's what he wants. I don't think tariffs are good long run, but he wins. He won.
What also getting a big boost here, and I mean I don't see how this is immediately going to affect travel here, but look at the moves that you're getting in Delta up $3.50, UAL
Huge.
up $5, RCL that's trading up $14. CCL. I mean, this also Brent pointed out as a travel stock, MMYT. We know what Booking's been doing here. Just Expedia. Did they buy the dip in that eventually? I know they were trading. They were trading lower on the report. Yep, they ended up buying the dip on that. But I mean, this is great for everything instantly.
Well, I guess, like if you were 145% down to 30, I guess that's going to make international travel just fly again with only 30% tariffs on China and only 10%. Like it sounds like we can clearly see there's going to be 10% minimum tariffs across the board. Trump is not going to budge from that. We can clearly see that. So we're not going to go to a non-tariff environment. I think the market can absorb 10% across the board. Is it, going to be, is it going to be inflationary? Somewhat, but it can absorb that. 30% on China? It's significant to the economy, to the economy from economic standpoint. Like you start thinking about stagflation. Let's just say it. I mean, kind of a prescription for it, really. If you're gonna jack up prices, and you take the 30%, like I said, and multiply it out, and you're getting 16% of your U.S. goods from China. That's a 5% lift to the CPI if they actually calculate the way it should be calculated. They'll figure out a way to fudge the numbers somehow. I don't know like where to go here as an investor. As a trader, I'm like, I'm not short in stocks. I'm like, what deal's coming tomorrow? You're getting run over. You're getting murdered. Murdered if you actually laid out the whole thought process of like tariffs are bad for, and we're going to go down on tariffs. The deal The deals is what the market wants. The deals is what the market's getting. They are applauding it. That's what I don't understand is how much they are applauding deals. The UK deal, the China deal, which is a temporary 90-day deal, it's up 3.18% right now. So the moves are astounding. That's got to scare you if you're short. What happens when we get a deal tomorrow and the next day? Maybe it's not with China. Maybe this was the big one. But what if we keep tacking on 0.5% or 1% every time we get a deal? What if we get 20 deals in the next 2-3 weeks? I mean, it's possible we're going to get some more deals. That's going to go a lot higher unless they start selling off on deals. That's the wild card. And once they start selling off on deals, once they start selling off on the Trump, go buy stocks, you better go buy stocks right now. Once they start selling off on that, then the market has problems. But right now, we're not seeing any signs of that. So can't start shorting stocks yet.
The other thing too, a correlation to bring in is there was the first 90-day pause, right? And then we have that's due to expire on I believe around the 4th of July, July 3rd. But now you have another 90-day pause, a 90 days. So that the 90-day that was supposed to end, clear the picture up was supposed to end in July. Now you got a new 90 days, so that kind of extends things out into August, and then who knows if things start to approach in mid-June or July. Oh, we'll do another 90-day deal
And
with
the market will rally another 3% on a 90-day pause. The market is fully on drinking all the Trump Kool-Aid right now. Like drunk on the market is drunk on the Trump Kool-Aid. Fully drunk on it. Well, I'm not going to fight it right now. There's more Kool-Aid coming. That spiking of the punch is still going and probably going to continue to be going here for a while because the Trump put is like you said, even in the title of the show, is like it's alive, it's coming higher. Just defending the stock market to, everything. Even, getting the excitement, the White House tweeting out, we have a China, deal, it's all over it right now. It's so interesting to watch all this. I just can't believe the extreme moves on this. And that's where, I struggle with trying to figure it all out, because when you really think about it, I don't know if any of this is actually good for the U.S. economy. But again, just saying and repeating myself here, that there's probably a lot more deals coming. So I'm going to just say one more time. It's hard to be short stocks as long as we're rallying on deals. When we stop rallying on deals, then we got problems. I don't think the corporate profit, but again, we're through earnings season, so we don't have to worry about corporate profits for another couple months. We're through most of it. So even if the corporate profits start to get squeezed a bit because of tariffs, squeezed a bit because maybe the U.S. consumers dropped a little bit more, squeezed a little bit because interest rates aren't coming lower anytime soon, that doesn't show up for another 3 months on Apple. We have NVIDIA coming, but that's still backward looking too. So really, timing of this sell-off, May, June, July maybe, starts to show up in the numbers. We'll have a lot of deals by then. Hard to be bearish until we start selling off on deals.
Helping the shipping industry. I read there's like Seattle port's empty. There's no ships coming in from China. Because of the tariffs, and now, boom, here you go. You got Zim. I don't know. Dry ships is gone. I know that, but Zim's is the big dividend payer. Is getting a nice pop off. Can't think any other shippers off the top of my head. But right now, the main one, Zim. So, is this totally going to reverse the value trade here? Is that I see Warren trading up this morning. I saw
bet. So let's talk, trading action off of this. Obviously, staples weaker, utilities weaker, drugs weaker off the headline, which we know. ATT, Verizon, defensive stocks, it's risk on. So we have our list of risk on, risk off stocks. The markets trades very simply. When you're risk on, you're ripping. They sell off staples, they sell off utilities, they sell off drugs normally, and drugs are down even more because of the headline. They sell off stocks like AT&T and Verizon, which are sitting there for the dividends, and rates aren't going lower anytime soon. Those are rate plays as well. So the AT&T and Verizon trade like bonds. Those go down. Those move opposite. They have inverse correlation in the market. At least they do right now. Tech is ripping. Tech, again, I've argued the whole time that maybe tech wins in a tariff environment because AI helps efficiencies, and you're going to have to be more efficient. If you're a U.S. company, let's talk about the bull thesis with AI. You're a U.S. company, and you're getting margin squeeze with tariffs. You got to be more efficient. So you're going to have to use more AI, probably cut some jobs, but figure it out. And that's good for NVIDIA. That's good for AMD. That's good for Micron. That's good for your chips. That's good for a lot of tech companies. So I think tech is still a buy on dips. Is this a dip? Absolutely not. Do we get a dip tomorrow? I don't even know because there'll probably be another deal coming and we'll get another rep. So the dips are few and far between the last couple of days, but they're there. So I think I'm still like, you got to be on the tech train. Still growth at a reasonable price. I'd look at those. I'm staying away from Google for obvious reasons I've talked about on the show a lot. But some of these other names, yeah, I think you got to be looking at dips to buy them.
Maybe perhaps some of them that got hit last week and tried to come back. Like I just pulled up. I know Marvell got hit off its earnings report. That's starting to climb back a little bit. A messy one always is MCI, but I mean that's up $1.87. Uh, Dell hasn't fully recovered. It seems like
But
they're
they're coming back a lot. They've
yep.
come back a lot. It was the April lows was just, that was the buying opportunity. And, I said, I think the lows of the year are in. It's looking more and more like that's going to hold. I also said I thought the highs of the year are in. I'm not sure about that anymore.
not not at this clip.
No, it's unbelievable. Just the moves. They're astounding. Like that there's this much bang. There's this much. Let's bring Tim Quast in this conversation. He's in the background here. I'll get his thoughts here because our thoughts. We've been talking about them. Oh, actually, is Tim here yet? We're waiting on Tim still. Sorry, he's not here yet. Thanks, Brent. Still waiting on Tim. He'll be here in a minute. Go into a couple stocks here, like just breaking down. I know Monday reported. I know Hertz. You got some stocks that reported. I'm not so concerned about those ones though. Like let's look at Tesla. We touched it briefly. Kathy got the pop, but I want to get some levels. We got Joel here who can give us some good levels. Tesla up 24 more points. I bought it on Friday close. I sold at pre-market a while ago. It continues to climb. So I guess I shouldn't have sold it all. I sold it last night when I thought, it had a nice 4 or 5% pop. I was like, that's a pretty good pop. Well, it's up 8%. So the party continues here. This looks like, again, long term, there's so many reasons to be bullish. Tesla, short term, the car sales aren't good, but nobody cares about the short term right now. Nobody cares about, if we're going to have a little bit of pain short term, because there's a lot, of good things coming everywhere, apparently. So Tesla continues to rally here. I still have a piece of my long-term portfolio. I wish it was bigger. I got spooked out. I did buy some more. I got spooked out on the European sales, and I've just been trading it from the long side. The trade's been excellent. Where are we going, Joel? Like this is wide open.
Next day, I'll just go back to February 25th. You haven't hit it yet. 328.89. That's your next daily high. You had to close that prior day at 330.53. And then the other high in that area is 342.40. But right now you're just pausing here at the pre-market high, which is 324.47. So it looks like right now, I don't know if it's an options player trying to lock something in, but there's 323.50. They're probably showing the offer out there at 50, and then any bids in the 323.40 handle seem to be getting hit. So this is just a big extension from Friday's move. So I don't know. I mean, after the move that you have on Friday, I don't know if this is the one that you want to be chasing. Maybe the ones that had an okay day on Friday. And I'm just talking about early in the session. So the Tesla having a good move, comfortably over 300 of That and Amazon are trading the most above where the S&P is trading. Wow, Amazon hit what 180, 181 in the pre-market on its earnings last week, and boy, here it is up at
Buy the dip.
210.
It's the
I will
biggest
just
position of my long-term portfolio. I mean, it's again, I've said Amazon for a while. I mean, it's the cheapest it's been relative to itself ever. You know, it got down to like 26 times earnings when it was down near the 160s. Amazon's never been that cheap before.
just keep in mind, Mr. Bezos is out there. He's selling like $26 billion of stock into this rally. So I don't
Is he?
know.
He's selling his
Yeah,
own?
he seems to be
Got to buy
pretty.
another yacht?
Yeah, he seems to be pretty like with his offers. You know, he seems to be out there. Really doesn't care. I think he was at like 200 before. Maybe he's at 210, but we'll see. We'll see if what happens. But anyways, 8:37. You guys got our opinions here for the first 37 minutes, but we need to look at it from a market structure standpoint with Tim Quast.
Those intros are endlessly entertaining, Joel. I need to hire you to just follow me around. You know, it's kind of like, did you ever see the movie A Knight's Tale with Heath Ledger? And
Yes.
they had their crier who would announce their arrival, and maybe you could come do that for me. I'm just kidding.
Well, you know what?
Joel.
We like for our special guests, and you're certainly one of them. We come up with some special intros.
You do.
And we're kicking off a big one tomorrow. I'll have to run it by the committee here to see if we do one for Tim. We'd have to work on
We
a
need
deal.
one for Tim.
We need one for Tim.
Yeah.
Executive decision.
Yeah. We love Tim. He's coming on so long. We'll put Josh on it. We need.
Well,
Tim
I love you guys.
It's
always a privilege to hang out with you guys.
To banter with the banterers. Okay, Tim.
Joel.
A little bit of a change scenario here. Flipping the switch on it. Does the market strong rebound? I mean, the Bears are the buried. I mean, we're ripping. Forget about the gap up. Yeah. Market structure just says close your eye and lift every offer on the open. We're going all-time highs tomorrow.
Yeah, it appears so, right? You never know. It's possible. I would say that the move in the markets today is just volatility, though. It is. If you look at the average volatility in the markets, it always gives you a pretty good idea how much the market can move, except for those rare occasions when it doesn't. And those are certainly turning points. And you could, go to early April. But I always use the 1, 2, 3 rule. I say that under ordinary circumstances, that, if the market is behaving as one would anticipate, which it's not at present. And there's an important point about the move today. There is the 1, 2, 3 rule that generally the big tracking instruments, the ETFs that follow the S&P 500 will move about 1%, have 1% volatility daily. It's about 1.3% prior to today, almost back to normal levels. Then the basket of underlying stocks that's supposed to track will move, give or take, 2%. And it's at about 2.4%. So you could say basically almost normal. And then momentum moves 3%, or could be more. And so if you look at the NASDAQ will be principally the momentum market, and you could look to see that it's 3.5%, something like that, thereabouts. But the point out of this is that the market does move in predictable ways. The question that I have, is every time this occurs, the prices that are created under these conditions get baked into the historical data set that all the algorithms depend on. And it's the market, I'll be one of the very few, Dennis, you do this too. Well, you guys do this, we talk about market structure, but we're the 1% who do that. 99% of people are going to talk about the fundamentals of the market. Where should the S&P 500 be priced? Points of resistance or support. No one talks about how the market is constructed. And this is how it's constructed. There are over 3,800 ETFs that are trading in the US equity market. Most of them have one authorized participant that will create and redeem ETF shares. And there are about a dozen broker dealers who are responsible for virtually all of the prices. There are a handful of firms that are making markets in ETFs, the equities, and the associated options. And then a handful of firms that handle almost all of the customer orders. And so it's interesting to state, we tend to think about the market as this vibrant, open outcry interaction between buyers and sellers, investors who are responding to, whatever it is, fundamental technical conditions in the marketplace. And really, it is a giant collection of arbitrage prices handled by the few. Jane Street, Susquehanna, Citadel are principally responsible for the prices in equities, ETFs, and associated options. So we'll see. I still haven't answered your question. Your question is—
I want to expand on that, Tim, what you just said, because I made this same argument last week.
Yep.
The same exact argument, that in the short term, prices are dictated by a very few number of firms.
Right. Yep.
Like, it used to not be that way, but it is not that way anymore, because you get a news headline and there's a half dozen firms to a dozen firms that are controlling where the price goes on that headline, it seems like. Especially after hours when it's thinner.
Yep.
What are your thoughts about that? Like, does that create inefficiencies longer term? Because I think it does. What are your thoughts on that?
Well, sure it does. And it creates a necessary mean reversion. I mean, if there are just a handful of firms that are pricing the market up and down, and those firms don't really want exposure to either side, the market will always come back to a mean that will be determined by whether there is excess inflow or excess outflow. It's that simple. But it's incorrect to describe the market as a good pricing mechanism if over 90% of the pricing horizons are a day or less. And the audience here, all of us who are using platforms, pick your thing, Interactive Brokers, Schwab, Robinhood, Morgan Stanley, E-Trade, whatever it is, your order is being bought by someone. 99% of the order flow from Schwab goes to 3 firms. And so those firms have a horizon of about 400 milliseconds. That's it, right? That's it. They don't want to have exposure longer than that. And if you think about what might have happened, I wondered if this might happen. So I put on a big long position on Friday about 4 minutes before the close. I mean, I'm long short. The whole market is long short. And I'll show you a couple of things that are important. But what consequence does that have? I have always contended, and it hasn't happened. I've always contended that if the market were to go 2 full monthly options expirations cycles with massive displacement in pricing, that something would break. Now, we'll come up on that this week. And I'll show you what I mean. Here, I'm going to share my screen.
Yeah, please.
These things, because it's important to understand how the market works. Otherwise, it's difficult and challenging when every day something could change. But it's important to understand how it works. Let's see here. Bear with me 1 second. Entire screen. Okay. There we go. All right. So here's what I mean. If you think about the entire market as being long or short, it's kind of telling. This is looking at the price of SPY, the gray part of the graph. It's the top one there. From early February. It's a roughly, 90 trading days. Is that what that was? It's fewer than that, but follow me here. It's the default view. This green part of the graph, we just call it demand. It's a 10-point scale. It's 504 stocks. So it's going to spend a lot of time between 4 and 6. And over the long term, if the market is at 5.4, it will have a propensity to rise because it's more than neutral. 5 would be neutral. And then this is short volume, the Reg SHO Rule 201 data set. Here's the fascinating thing to me. That you go back to March options expirations, so call it about the 19th, and the market has been more than 50% short. More than half of all trading volume is short, and it still is. As of this moment, it is 54.6% short. Now that's market making. It's the how the market can't, you go to Amazon to order something and it's out of stock, and you can't get that. Never happens in the US equity market. How can that be true? How does it defy the laws of physics that every time you want to buy or sell Tesla, you can do so? Well, it's because the rules of having to locate shares to short are suspended for market makers who are offering or making a bid and an offer. And so there is literally an infinite supply. And that's what you see manifest on days like today. How can the market move so dramatically if no one bought or sold? Well, because market makers may respond to any marketable trade, up or down. So here's the point. From March to present, the market is more short than long. And on the supply side, since April options expirations, basically, call it the 23rd, 24th, the supply side has been above the red line. The market, or demand side has been above the red line. So the market has had two contradictory conditions simultaneously. That is, it is overbought and more short than long simultaneously. And it's a very interesting condition. And realize that, you can't go back in history like, well, what happened in 1987? 1987, there was one all electronic market, the Cincinnati Stock Exchange. Then the market was manual, which one of the fixes was to make it electronic because people just stopped answering the phone. Market drops 22% on whatever day that was. It was the 29th of October, 1987, something like that. So those conditions don't exist. This is a very young market from the standpoint that you cannot rely on history to tell you what will happen. We do not know what happens in a market that has more ETFs than underlying stocks in the NMS, and a vast number of instruments that are derived from those, options and futures, that have very short-term expiration points. And what does volatility do to all of that? Well, we're finding out, right? We're finding out. Is it possible? And I don't know. I don't know from one day to the next. All I know is what the demand-supply balance is. That we have an equal and offsetting opposite effect from this. Possible. So I'm starting to answer your question, Joel. Does this change my view that the market has a significant bear market risk? No, it doesn't. I'm not like Mike Wilson. I thought that was funny, Dennis.
Did you see that today?
I did see it.
So he's turning bullish.
Right. And on what? What I come back to it, and it's not fundamental, it is market structure. What I come back to is what is the relationship involving the over 90% of market volume that it relates to a basket of stocks, ETFs, and associated options. And all that matters to me is there excess inflow or outflow? Well, if I looked at this, I would not suddenly become bullish. I mean, you suddenly become bullish back here.
Yeah.
This is where, and that's where I did it, so I made a big levered long trade here,
Nice.
right?
Nice.
Now I'm exactly like the market. I am long short because I don't know. I would look at this and say, we get to options expirations, or even, I don't even know what will happen today or tomorrow. But this kind of market to me has the capacity to shock you both directions, right? Because it doesn't know which way to go. And a lot of this has to do with that tight relationship. If you're trading overnight, let's say, I give a basket of stocks on Friday to BlackRock, which gives me ETF shares. And I borrowed that basket of stocks to give to BlackRock. And then over the weekend, there's a trade deal, and all of a sudden, everything soars. Well, I'm short those stocks as the market maker. Now I've got a basket of ETFs that have now shot up in value. Does it absolve me of my risk? I don't know the answer to that. What about the associated options? I do know that this stuff is 90% of volume. So the interesting thing to me is the market is doing exactly what the data have indicated. It is both screaming hot above the red line and extremely short. It's both. Now, what happens? I don't know the answer to that.
That's the trouble here. And I think,
Right.
you said it perfectly, just saying this market basically overshoots in both directions. And that's really what we did. We overshot in the beginning of April when they were just collapsing stocks across the boards because tariffs was going to end the world. And now it's like, oh, we got a couple deals and we're like, hallelujah, amen, tariff crisis is over. So I mean, it does overshoot in both directions. And I mean, on the headlines, the overshoots on the specific headlines is just insane as well. I mean, we're getting moves. Even think about the earnings reports. You have like 25% moves on some of these stocks off earnings. Is it really that different all of a sudden? But we're just in this market environment there. Nobody really knows like how all this is going to play out. Like we can guess that, oh yeah, tariffs probably inflationary, but we don't even know where those numbers are going to land. I mean, this market is just so full of uncertainty. It's hard to like really predict out farther than the next 7 minutes. And and that's why you're staying long short. And I do usually too. There's times where I go directional bets, but I try to stay long short too for the same reasons, is that we just don't know what the next headline is going to be.
Right. And if you're listening to this, you think, well, Quast, how do you make money if you're long short? You hope that you pull the one side of the trade or the other at the appropriate time. And I think about that in terms of volatility. If the market moves all of the volatility one direction or the other, take your gains on that side of the trade. There's a very high probability of some mean reversion. And how would I know that that is true? Because of what I just talked about. The market is not a bunch of people making significant investment commitments. All you have to do is look at the bond market to see that that is true. Right? The bond market is not moving like the equity market today. It's moving opposite of it, which I guess is okay. But that's not what is occurring. What is occurring generally in what you see in front of you in prices is this effort to keep the basket of equities and the ETFs and the associated derivatives aligned. And it gets very difficult. It's why I contend that during this period, probably somebody went broke. Now, it takes a while for that to manifest. And that's why I'd say, and this happened, you look at where this happened. It happened right after month-end options expired. Those are used by trillions of dollars tied to indexes. That's what they're for, to make sure that you're tracking correctly. Because if you don't, you get in trouble with the regulators. And most of us are using that. Norges Bank, largest investor pool in the world. It's an index fund. It's a giant $1.8 trillion index fund is what it is. Well, what happens when you have these kind of moves? There's a counterparty. So then you get to the next set of options expirations right in here. And what did the market do? It reverted to the mean where it was here. Now, we've had this, I don't know, again, what's going to happen. I just think that May options expirations could be, if you just look at that, if those are your data points, completely separate from posts on X or True Social or whatever, or what the relationship between China and the USA is on a trade basis. If you just said, okay, things move from options expirations to options expirations, what might happen next? It's more predictive than anything else that I have found. So I don't know, but I look at these conditions and say, well, one or the other has to give. And so somebody was right and somebody was wrong. And we'll see how significant it is. And always remember, about a dozen firms are responsible for all of those prices. And I'm talking about Citadel, Susquehanna, James
the hell out of me.
Right? And 8 or 9 prime brokers. That's it. Virtu's in there too. Virtu's a big concern. I love the Virtu guys. They're great folks. And they're a core buyer of wholesale order flow. Though all of those people have to get the prices right. All of this stuff. And we're talking about in this period of time, the notional value trading in the US equity market, called 30 billion shares a day, $1 trillion, Right now, we're at 15 billion shares daily, $600 to $700 billion a day. All of that depends on 12 firms to get it right. So I don't say those things to frighten people. I just say you need to understand what's really occurring if you're going to make sense out of it.
All right, we've been on the line with Tim Quast. You know Tim, a Market Structure Edge, joining us usually on Mondays. Tim, good information here, and we'll be dialing you up again real soon. Thanks for joining us here on PreMarket Prep.
Have a great week, you guys. Thank you. Good to see you.
Thanks, Tim. Joel's on mute. His old mute trick with this headset.
No, I'm not. I'm not on mute.
Oh,
nope.
you aren't.
I wasn't
I saw your lips
speaking.
move. I saw your lips
No.
move, and then they didn't. Okay.
You know, since I did my high-tech reboot of my drivers,
It's working.
It's working.
Good.
Okay. All right, Dennis. Here we are coming into the open.
I'm going to
Quiet out
say,
there.
like, today, at this moment in time, I have no idea where we go. I could see either way. I'm waiting for more information. So the money's been made. Those overnight trades I made, I've sold them. I sold my Tesla this morning. I sold my Oklo. I sold my, Burke. I sold everything I just bought. Everything I bought on Friday. My SoFi, RGTI, on, the little one, Space, all gone. Sold them all. What do we do now? We wait for more information. What is that information? Does this market sell off on this news or not?
Yes.
Does it hold the gains? Because if it holds, so that's a prediction, and that might happen. I'm in the I don't know camp. So I'm not making any trades right now here. Not making any investments. I never buy the rip. I'm not looking to, can I go buy my long-term portfolio when we're up 17 points on the on SPY? No, thank you. So Joel thinks yes, he thinks it sell off it. I tend to think it's going to sell off on it too, but I might be wrong. So I'm like just sitting and I'm like, no trade for me right now, but I want the information of this because this was like the big deal. This was like what we needed, but the deal wasn't even finalized. And then we got to get the details. What are the details? We're going to find out those details very soon. This drug pricing stuff. Do the drug stocks bounce on this? Is it not as bad as we thought? We don't really know the details on this yet. So the devil is in the details, so it's hard to say. So I think you got to just sit back, take in information here now, collect your profits from last week, and wait for more information. Because when we start selling off on deals, that's when we got problems. As long as we hold the gains, the bulls are in complete control. So let's wait for that information. You don't have to make a trade on everything. The money was made. You can short in this and say, I think we're going to give all this back. Part of me wants to do that, but then part of me says we didn't do that on Friday, really. Like we had the UK deal, we started to sell off. Yeah, maybe a bit, but not that much. It was Thursday. I'm losing track of days. When was the UK deal? Thursday? The pricing action? Thursday, I guess. So let's see what happens. Let's see what happens.
Was it Thursday night?
They're saying I'm bearish in the chat. Everybody thinks I'm bearish because I rant a bit. I wasn't bearish. I don't understand it, and I'm ranting that it doesn't make sense, but price action tells me I can't be bearish. I've been saying there's more deals coming. I've been saying that the whole time. They're going to rally on deals. I've been saying the low of the year is in. If you think I've been bearish, my P&L says no, because I'm making money. I think I'm just being logical, and I'm trying to you confuse and people are saying, why is Dennis so upset this morning? One guy got it right. Oilers pissed me off for sure on the weekend. But, that's not everything here. I'm just I just speak in my mind. Logic. Realistic. There you go. Eddie's saying in the STN room. Not bearish. Real. Just speaking, realism here. Realistic. That's where I'm at. I don't know where the market goes from here. If we get more deals, we're likely going higher, and more deals are probably coming. So hard to be bearish. When we start selling off on deals, that's when I'll get more bearish. I got to wait to see that. I haven't seen it yet. Hello says ranting on highs, ranting on lows. That's right. I just make rants. That's what I do. I rant all the time. Listen to this show. It sounds like I'm always mad. If you associate being like ranting with bearishness, then I'm always going to sound bearish.
You
I'm
were
always
you
gonna
were
take.
you were not bearish. I saw no bearishness at all. Talking with you later in the day yesterday in the STN room, and in fact, when you were putting in some of those trades, you're like, we could get crushed. Who knows what's going to happen
Yeah,
on
I
Monday?
said
We
if the
could get
stocks
crushed
break
on
down, we're going
Monday.
to get crushed on this trade.
But I'm doing it. I'm doing
But I'm
it
doing it.
because it's working. There was no.
And the
I
tape
mean,
was telling me to do it. So you
the
got to
tape
watch
don't
trading action
lie.
there too. Those trades all paid. Those trades all paid their
901.
bills.
901. 901, and we got to wrap things up here. Boy, if you thought there was bearishness on this show today, we're going to bring you a major dose of bullishness tomorrow with Ryan Dietrich, and
Nice.
we've been working on
We
something,
have been
a
waiting for Ryan.
special
He's
intro,
trying.
and I think all you Debbie Doubters here in the chat are going to get a real kick out of tomorrow's show. So getting some love here in the chat, and it's great to be back. I would just say, man, I'm not going to say the high of the day's in because we're only 15, 16 handles in that, but I just don't see us opening up at 56, 58.50, going 60 bid, 70 bid, taking out the pre-market high, going to 5,900. There's got to be some check back in here today, folks. So keep an eye on your pre-market levels, and we'll wrap it up and be back. You know where to find us tomorrow morning.
Thanks, everyone.